Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, the market is open and we can see that gold is trying to recover right after the market opening. Right now, gold is standing at 2011. This is the current market price of gold. And if we look at a chart of DXY, then we can see that DXY, okay, is kind of silent, not much activity, movement, or craziness going on. DXY is standing at 101.62. After the market opening, there is a little bit of correction, but still, there is no big move here. Overall, the trend of DXY is still very much intact. And my dear friend, if you're new to the channel and looking for a detailed analysis, then please watch the video that I uploaded on Saturday, because I do not want to repeat the same stuff and bore you again, okay, by repeating all the levels, explaining and all. Okay. So overall, DXY is still very much weak. Okay, there's no news in the market today. If you look at it in the economic calendar, you'll see that today there is no news. So by US session, there may be some volatility in the market and we may get to see some move. But right now, market is more or less silent. And if DXY starts falling without news and if there is not much volatility, then hopefully the last support of 100.80 should work. So volatility of the market will decide everything. If the volatility is low, then market will take support around 100.80, the previous level from where market bounced. And if the volatility is high, then obviously market will try to break the dollar here. As we have already discussed in a previous video, that though dollar is fundamentally and technically weak right now, but still somewhere down the line, DXY is not ready to surrender. And if you look at the news, then we'll see that goal of 1-year highs as investors weigh rate hike prospects. Gold prices inched higher on Monday, but were off 1-year highs reached late last week as mixed economic data prompted investors to reassess the US Fed Reserve's rate hike trajectory and boosted the dollar. And yes, I don't want to look at the news. I am frustrated. Already I have explained in my previous videos. So let's look at the chart of gold. See, you can clearly see that the levels that we discussed on Saturday are still very much valid. So during the day, if the volatility of the market remains like this, then we have next resistance around 2021 and 2027. These are the two resistance levels. If market reverses on the hourly time frame or 15 minutes time frame, you can look for a sell position. If market shows price rejection from above, then only look for a sell position. Be careful, do not look for a complete trend reversal, because we cannot deny that market is still trading inside an upward channel only. Because if market tries to continue the upward trajectory, then obviously the no resistance will work and gold will be bullish again. We cannot deny that both fundamentally and technically gold is bullish right now. So as a result, if the volatility of the market is low, then only we should expect that there may be some reversal or temporary reversal for 25-30 pips around the resistance level of 2021 and 2027. These are the two resistances for the day, as long as market is sleeping like this. Okay, and during the day, if market starts falling down, then the last level, okay, the last level from where market reverse is 1991 to 1993. This is the level where you can expect the market to take support. Again, the role of volatility will be important. Usually in this type of scenario, the once market, okay, after testing a level once, okay, market does not come for the second time. But here, if the volatility of the market remains like this, if you see the market is slowly coming down to the support level, then you can expect that the support may work and you can again expect a bounce of 30-40 pips. But if you see that during the European session, or especially during the US session, because usually during the US session on Monday, we get to see some movement or volatility. If you see market falling like this, means there is volume pressure, there is volume, sellers are dominating. So in that case, you can expect the market to break the support. So volatility, yes, your observation and volatility will play a dominant role. If market comes down with volatility, then your next support zone will be 1983 to 1977 or 78. Okay, this is the next level of support on the chart of gold. And today, let's let's conclude the video with discussing these levels only, because yes, we have multiple supports on the chart, but those support levels are quite far away, so we don't need that. The strongest level, as mentioned on Saturday also, that the strongest support on the chart of gold is around 1958 to 1950, but 1958.50 is quite far away, so we don't need to discuss about this level. Hopefully, if market comes down, then the level of 1983.70 should work. Let's wait and watch. Right now, our main focus should be on this particular portion of the chart. So let's wait for some volatility, especially during the European session and US session. And already my video is late because I was planning to record a video in the morning, but I saw that there is not much activity or movement going on. There is no change on the levels, so I thought that I should make a video so, right before the European session. But still, we can see that there is not much activity, and still the things are same. So be careful during the US session today. Thank God we don't have any news, so market will not be crazy during the US session. Let's wait and watch. Anyways, my dear friends, this is my analysis. I can be wrong as well. So follow proper risk management. Bye bye. Take care. See ya tomorrow, and all the best.